All right, let's talk about something we all know. You know how for, well, most of our lives, there's been this one single three-digit number that kind of holds this mythical power over our biggest goals. I'm talking especially about one of the biggest ones, buying a home. But what if I told you that number is actually starting to lose its grip? I mean, it's a question we've all probably asked ourselves, right? Especially when some algorithm just boils down your entire financial life into one score. For a long, long time, the answer, at least when it came to getting a mortgage, was a pretty loud, "Yup, it sure can." And this was the number, 620. For years, that was it. That was the magic number. It was the key that could either unlock the door to your dream house or slam it right in your face. So, to really get why this is all changing now, we've got to go back a bit and understand the history. The real problems with relying on just one number. Yeah, you can pretty much think of it as the very first hurdle in the whole home buying marathon. And if you couldn't clear that 620 score, well, you were pretty much stopped in your tracks before you even got going. Okay, so how on earth did this one number get to be such a powerful gatekeeper in the first place? Well, this wasn't just some random score. It was what they called the minimum representative credit score. And it was used by Fannie Mae, who, is one of the absolute biggest players in the US housing market. It was basically a super simple, kind of blunt filter. If the middle score you got from the three big credit bureaus was below 620, that was often it. Application denied, end of story. Now, the logic behind it was, pretty straightforward. They figured a lower score meant a higher risk that someone wouldn't pay back their loan. It was a simple, really quick way for them to sort through literally thousands of applications. But as we all know, simple doesn't always mean fair or even accurate. But things change. The housing market evolved, and that simple logic, it really started to show its cracks. A huge shift was coming. And here it is. In what is honestly a landmark move, Fannie Mae has announced they are completely getting rid of that 620 minimum score requirement. This is a huge deal. It completely redefines the very first step of getting a mortgage for literally millions of people. Okay, so don't rush out the door just yet. This isn't happening tomorrow. The new rule officially kicks in for new loan applications starting November 16th, 2025. And that makes sense, right? It gives the whole industry time to adjust to this new way of looking at things. So you might be asking, why now? Why make such a big change? Well, to put it simply, the market kind of demanded it. You've got these sky-high home prices, rising interest rates. The old system was just locking too many people out. And on top of that, you have this growing number of people who are totally financially responsible, but they just don't have a long credit history, what the industry calls a thin file. That old 620 score was becoming a totally unnecessary barrier. And this, to me, is where things get really interesting. If it's not about that one score anymore, then what is it about? We are seriously moving into a whole new era of how we evaluate someone's financial identity. And just listen to the language they're using, because it says a lot. They're calling it a philosophical transition. See, this isn't just about tweaking a rule. It's about moving away from a simple pass-fail grade to a holistic look at a person's entire financial picture. I mean, look at the difference here. It's pretty striking. We're going from the old way, this rigid, black and white gatekeeper, to a whole new way, which is a much more comprehensive and frankly more nuanced review of who you actually are financially. So here's the nuts and bolts of how it'll work. Instead of just hitting that 620 FICO wall and stopping, an application will now go into Fannie Mae's automated system. It's called Desktop Underwriter, or DU. And this system performs a way more sophisticated risk-based evaluation of your entire file. All right, so let's get down to what really matters. The big question. How does this change actually affect real people out there trying to buy a home? While the official goal is really clear, it's all about opening the door to homeownership for more people. The hope is that by getting rid of that first big barrier, the dream of owning a home becomes just a little bit more accessible and a little more affordable. And when you think about who this could help, it's pretty exciting. I mean, this could be a total game changer for first-time homebuyers, people who haven't had decades to build up their credit. It could also be a huge help for those people with thin files we talked about, or really anyone who's good with their money but just doesn't fit neatly into that old rigid box. So here's the bottom line. The really crucial point is that the focus is shifting. It's moving away from one single data point and towards your full financial narrative. Your whole story, your income, your savings, even your history of paying rent on time. all of that could now play a much, much bigger role than it ever has before. And, this whole shift leaves us with a really fascinating question to think about for the future. As we start to move beyond just a single simple score, how are we going to define what's truly fair when it comes to finance? It feels like this conversation is really just getting started.